Hey everyone, welcome back to Corporate Decoder. Today, Rowe Price Global Funds, Inc. just filed their N-CSRS report for the Institutional Emerging Markets Equity Fund, and I am spotting some interesting trends in their investments. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report gives us a snapshot of where the fund is putting its money and how it is performing, offering clues about the global investment landscape. So we're looking at the Institutional Emerging Markets Equity Fund, or IEMFX if you prefer. This is a fund that aims to grow your money over the long term by investing in stocks of companies that are in what we call emerging markets. Think of countries that are developing their economies like those in Asia, Latin America, and other regions. First off, let's talk about costs. For an investment of $10,000, the fund cost was $54, which is 1.00% of that investment over the last 6 months. That is pretty standard for this type of fund, ensuring that most of your investment actually goes to work in the market rather than being eaten up by fees. Now, for some big picture numbers, the fund has total net assets of $600,244,000. That is a lot of money being managed. It holds 81 different investments, meaning it is not putting all its eggs in one basket, which is good for spreading out risk. And when we look at how often the fund buys and sells its investments, the portfolio turnover rate is 16.4%. This means they're not actively trading every single holding very quickly. A lower turnover rate often suggests a more long-term investment strategy, which can sometimes lead to lower trading costs and potentially better tax efficiency for investors. Let's dive into what the fund is actually invested in, sector by sector. Information technology is the biggest slice of the pie, making up 40.1% of the fund's assets. This indicates a strong bet on the growth of technology companies in emerging markets. Following that, financials account for 18.7%. This makes sense, as financial services are crucial for growing economies. Consumer discretionary is at 8.9%, showing confidence in people's ability and willingness to spend on non-essential goods and services as these economies develop. Industrials and business services also represent 8.9%, reflecting investment in companies that build and maintain infrastructure and provide essential services. Communication services come in at 7.4%, highlighting the importance of connectivity and information flow. Consumer staples, which are everyday necessities, make up 4.0%. This is a more defensive allocation, providing some stability. Materials are at 3.8%, so they are investing in companies that extract and process raw materials. Healthcare is 1.8%, and real estate is 1.2%, showing smaller but still relevant exposure to these sectors. And there is 5.2% in other, a catch. All for investments that don't neatly fit into the main categories. Now, let's look at the big players, the top 10 holdings that make up a significant chunk of the fund's value. Leading the pack is Taiwan Semiconductor Manufacturing at 14.8%. This is a massive bet on the chipmaker, which is at the heart of the technology world. Next is Samsung Electronics, a giant in consumer electronics and semiconductors, making up 8.8%. SK Hynix, another major memory chip producer, is at 6.3%. It is clear this fund really believes in the semiconductor industry in emerging markets. Tencent Holdings, a Chinese technology and entertainment conglomerate, is at 4.2%. Alibaba Group Holding, another Chinese tech titan, holds 2.5%. Then we see Unimicron Technology at 2.4% and Delta Electronics at 2.2%, both also in the technology hardware space. Honhai Precision Industry, a major electronics manufacturer, is at 1.8%. ICC Bank from India is at 1.6%, showing some diversification into India's financial sector. And rounding out the top 10 is Contemporary Amperex Technology, a leading battery maker primarily for electric vehicles, at 1.4%. Looking at the unaudited financial highlights, we can see the fund's performance over different periods. For the 6 months ended the 30th of April 2026, the net investment income per S-share was $0.08. That might not sound like much, but it is part of the overall return. What is really driving the numbers is the investment activities. For this 6-month period, the net realized and unrealized gain was a very strong $7.25 per S-share. This shows that the fund's holdings increased significantly in value. This resulted in a net asset value per S-share of $47.11 at the end of April 2026. This is up from $40.76 at the end of the previous fiscal year. So while there were distributions of $0.98 per S-share, the overall value of the investment grew. The total return for this 6-month period was 18.46%. That is a very healthy return for just half a year, especially in emerging markets, which can be quite volatile. For comparison, the full year ending the 31st of October 2025 saw a total return of 26.22%. It is important to note that these returns reflect reinvestment of all distributions and don't include any fees you might pay to your broker. The gross expenses before any fee waivers or payments by Price Associates, the fund manager, were 1.00%. This is consistent across the periods shown, indicating stable expense management. Net assets have seen some fluctuation. They were $600 million at the end of April 2026, down from $540 million in October 2025, but up from $553 million in October 2024. This kind of movement is typical for funds heavily invested in emerging markets where valuations can swing. For instance, back in 2021, net assets were a much higher $1, 960 million. Diving deeper into the portfolio of investments, we see the geographic breakdown. China has the largest allocation at 21.6%, with a significant portion in common stocks, and another chunk in China are shares. Taiwan follows closely with 24.7%, also heavily weighted in common stocks. South Korea is at 17.8%. with its own strong slate of tech and financial companies. India is at 10.2%, showing a growing presence. Other significant allocations include Brazil at 4.9% and Saudi Arabia at 2.4%. This shows a clear focus on Asia and some strategically chosen markets elsewhere. Looking at specific countries, Argentina represents 1.5% of the portfolio. Here, the fund holds Mercadolabra, a major e-commerce and fintech player, and Vista Energy. Given the economic volatility in Argentina, this allocation indicates a calculated risk for potential upside. Brazil accounts for 4.9%. Investments here include Ito Unibanco Holding, a major bank localizer rent-a-car, and New Holdings, which is a popular digital bank. This suggests a well-rounded view of the Brazilian economy, from financials to consumer services. China, as mentioned, is a big one at 21.6%. The fund holds a diverse range of Chinese companies, including giants like Alibaba and Tencent, but also companies in banking, insurance, and even mining. The inclusion of China shares shows a direct investment in the mainland market, which can be more complex but offers direct exposure to domestic growth. Contemporary Amperex Technology, a leader in EV batteries, is a notable holding here, signaling a forward-looking approach. South Korea, representing 17.8%, is heavily dominated by tech giants. Samsung Electronics and SK Hynix are the two largest holdings, underscoring the fund's strong conviction in the semiconductor and electronics sectors. Hyundai Mobis and KB Financial Group show some diversification into automotive and financial services, respectively. Taiwan, at a commanding 24.7%, is clearly a core focus. Taiwan Semiconductor Manufacturing Company is the largest single holding in the entire fund at 14.8%. This makes sense, as Taiwan is a global leader in semiconductor manufacturing. Other significant Taiwanese holdings include Hon Hai Precision Industry, a major electronics contract manufacturer, and Delta Electronics, a power electronics and automation company. This heavy concentration in Taiwan signals a belief in its strategic importance in global supply chains, especially in technology. It is also worth noting that 3.2% of the fund is in short-term investments, specifically in the Rowe Price Government Reserve Fund. This is likely for liquidity management, ensuring the fund has cash readily available for redemptions or new investment opportunities, without taking on significant risk. Looking at the statement of assets and liabilities, we see total assets of $602,142,000 and total liabilities of $1,898,000, leading to net assets of $600,244,000. This means the fund is in a solid financial position with significantly more assets than liabilities. The statement of operations for the 6 months ended the 30th of April 2026 shows a healthy picture. Dividend income, net of foreign taxes, was $3,722,000. Investment management and administrative expenses were $2,734,000. resulting in a net investment income of $988,000. But the real story is in the realized and unrealized gains. The fund saw a net realized gain of $33,210,000 from securities. On top of that, the change in net unrealized gain was an impressive $61,512,000. This means the value of the fund's holdings increased substantially during this period. Combined, the increase in net assets from operations for this 6-month period was a substantial $95,704,000. This growth is a strong indicator of the fund's successful investment strategy. For the full year ended the 31st of October 2025, the net investment income was $5,816,000. Net realized gains were $34,951,000, and the change in net unrealized gain was $75,546,000. This shows consistent growth over the past couple of years. The net assets increased by $60,078,000 during the 6-month period ending the 30th of April, 2026. This positive movement reflects both the operational performance and shareholder activity of the fund. Now, a quick look behind the curtain at how they do their accounting. The fund follows generally accepted accounting principles, or GAAP, which is the standard for financial reporting in the US. They account for investments on the trade date and record income and expenses on an accrual basis. This means they recognize revenue when it is earned, not necessarily when the cash changes hands. Valuation is crucial, especially in emerging markets where prices can be more volatile. The fund's financial instruments are valued at fair value, which is basically the price they would get if they sold it in an orderly transaction. They use a hierarchy to determine this fair value, with level 1 being quoted prices in active markets. Level 2 using other observable inputs, and Level 3 using unobservable inputs where judgment is heavily involved. For most of their equity securities, they are using Level 1 and Level 2 inputs, which suggests they are generally valuing liquid assets in active markets. It is also important to understand related party transactions. The fund is managed by Rowe Price Associates, Inc., which is part of the larger Rowe Price group. They have an all-inclusive fee of 1.00% of the fund's net assets. This fee covers management and ordinary operating expenses, but not things like interest, taxes, or extraordinary costs. This structure provides a degree of predictability for investors. The report also details the annual approval of the investment management agreement. The board of directors reviewed the services provided by the advisor and sub-advisors, their investment performance, and the associated costs and fees. They noted that while the fund's performance lagged its benchmark for certain periods, the advisor provided explanations and outlined efforts to improve. The board concluded that the fees paid are reasonable given the services, and the overall structure aims for a fair sharing of benefits from economies of scale. Regarding fees, the fund's contractual management fee ranked in the 4th quintile, while the actual management fee rate was in the 5th quintile, and total expenses were in the 3rd quintile when compared to similar funds. This suggests that while the fund's actual management fee is on the higher side compared to its peers, its total expenses are more in the middle of the pack. So, what does all this tell us? The Institutional Emerging Markets Equity Fund is heavily invested in technology and financials, with a strong concentration in Asia, particularly Taiwan and South Korea. The fund has shown impressive growth in its net asset value and delivered strong total returns over the past reporting period. While the fund's performance has had some weaker periods compared to benchmarks, the management team appears to be actively addressing these areas. The expense ratio is competitive, and the strong net asset growth indicates investor confidence and successful investment calls. The risk I am watching is the heavy concentration in technology and specific geographies. While this has driven strong returns, any downturn in the semiconductor industry or geopolitical instability in Asia could significantly impact the fund. My biggest concern is the reliance on a few key sectors and countries. Diversification within emerging markets is good, but the top holdings are very concentrated. What I am actually looking for is continued strong performance in these key sectors and the ability to navigate any emerging market specific risks. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.